Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Marc Bautis. Today I'm joined by a special guest, Morgan Anderson, enrolled agent. Morgan's the CEO and founder of Golden Lion Tax Solutions and the author of Tax Debt. Rule number 1, there's always a solution. For the last 24 plus years, Morgan has represented thousands of clients before the IRS and state tax agencies, successfully identifying the best solution given their unique financial situation and then negotiating their acceptance. While pursuing resolutions for clients, she has escalated her cases up to the various ranks of the IRS, even successfully negotiating solutions for clients with the National Taxpayer Advocate and the Director of the IRS Collection Appeals Division. Morgan, welcome to the show.
Oh, Marc, thank you so much for having me. It's an honor to be here.
Yeah, so I guess you can say I'm excited to talk about taxes and dealing with the IRS. But it's a topic that unfortunately some people have to deal with, and it's great that we have you on here to talk about it. How did you become a tax resolution expert?
Oh my gosh, happy accident. I was in my mid-20s managing a candle store on Boulder's Pearl Street Mall, bored out of my mind. You know, I've always loved numbers. I've always loved debate. I've always loved finding solutions, being that problem solver, and I love helping people. And I answered an ad in the Boulder Daily Camera for an administrative assistant position, and I went and interviewed, and it was with a company that did tax debt resolution. And I, being young and naive, I had no idea that taxes could be due. I thought they just come out of everybody's paycheck and just had never been exposed to that before. So I did the interview and I called my dad, who was a lieutenant colonel in the military, and I said, Dad, I had this great interview, but have you ever heard of people not paying their taxes or having a tax debt? And I could hear him shaking his head. Right? Like, 25-year-old daughter, you're so naive. And he said, yeah, hon, that happens, And I said, well, should I take the job? And he said, sure, why not? Give it a try. And I fell into this unique world that I had never been exposed to before. Again, I was 25, so keep that in mind. But I loved it. It mixed numbers and law and speaking with people and trying to get what you want out of a situation, right? And helping people who are scared, helping people who don't know what to do, who can't sleep at night, who have this worry on their mind. And I learned how to successfully handle any type of tax debt situation you can throw at me. As long as a client will follow my lead and follow the steps that I tell them I need them to do on their part to let me do my job, we can get there. And it inspired me. It lit this fire in me. And almost 25 years later, here I am still doing it.
What are some of the, because you call them typical situations that people reach out to you? I know you mentioned you're just not flatly paying your taxes, but are there other ones that people reach out to you with?
The list of situations that I've seen would make you lose hope in humanity. From the embezzlement and the theft that I've had to help clients overcome dealing with that situation. And a lot of it is family. You have extended family all working together, and I've seen so many situations where a cousin will be involved or a wife will be involved or a husband will be involved, and somebody's been pilfering money out of the business and hiding it through the taxes. Because if you don't pay the electric bill, right, the electricity gets shut off. It's pretty easy to detect when something like that happens. But if you don't pay the payroll taxes, nothing happens for a while. It usually takes the IRS a few quarters with payroll taxes to realize something may be wrong. And then they'll send a notice saying, we haven't gotten a quarterly tax return and we haven't gotten any payments. Could you please file the return that you haven't submitted? And it's easy for one person to intercept that from the mail. They don't assign a revenue officer to get involved with a case for quarters and quarters. So you can really rack up a bill, and it's easy for a business owner to rob Peter to pay Paul when things get tight. We've seen it happen time and time again. Every business I've worked with, that has ended up happening. Like, well, I'm juggling the finances because a big contract is slow with paying, or a competitor came in and is undercutting my costs for the same service. We see all kinds of different scenarios. We see it with individuals where they inherited a bunch of money and nobody gave them good, sound tax advice. And then before you know it, they ended up with a tax bill from the way they spent the money. There's various situations, any scenario you can think of, and I've seen it. I've had sales tax situations where an in-house bookkeeper didn't understand the responsibility and just didn't pay attention to it for 2 years. I mean, we could talk about it for hours.
And like when someone does something like that, do you think are they thinking that, okay, I'm never going to get caught, and then they do, and that's when they say, okay, maybe I should reach out and get some help with this?
I've had that situation. Yeah, but most of them, in most cases, it's the business owner who is just doing what they can to keep people employed and to keep the business going day to day, right? So they know what's happening, and then eventually either they start getting, as we call them, love notes from the IRS or the state threatening to take action if they don't start addressing the issue. Or they have a turn in their finances and they say, okay, I've kind of like shoved this under the rug long enough. Now I'm ready to start handling it. I need help just figuring out how to unwind this knot with the IRS or the state.
When someone does reach out to you, what's usually that? Is there like a common question that you get when you first speak to them?
Inevitably, it's, am I going to go to jail? Inevitably. And, the IRS and the states have done a very good job of creating this big ugly monster, right? When clients tell me what they envision the IRS or the state to be when there's a tax collection situation, they think of some guy showing up and knocking on their door with a fedora and an overcoat and a gun and a badge saying, we're going to take your vehicles, we're going to take your firstborn. And that's not the case. But the tax agencies do nothing to squash that image, right? They want you to be afraid, because if everybody is afraid, then they will voluntarily comply with the tax obligations that all of us have that allow the federal government to make the country continue to operate from day to day.
So let's say someone does have some kind of tax debt for whatever the reason. What options do they have, or what options do you help them with?
There's about 10 big ones, but I'll tell you the most common are figuring out, according to the client's financial condition, what they can afford to address the debt with on a monthly basis by setting up a monthly payment plan, fighting for the penalties to be lowered through a penalty abatement request. There's offers in compromise. Offers in compromise are the big ones that everybody hears about in the commercials. I owed $200,000 and I hired this company and they settled it for $5,000. That is a real situation. It's not a purple unicorn, I promise. But they're not easy to get negotiated. They really aren't. There is a way to have a taxpayer designated as legally not collectible. They just don't have the means right now to address the debt. And they may not qualify for one of the other options, but that option they will qualify for. So there's situations where sometimes you just stay quiet and you monitor it and you keep the client out of accruing more debt and you run the collection statutes. There's all kinds of different strategies that you can employ, and every taxpayer's situation is unique. It's unique because their financial condition is different than anybody else's. Their income, their expenses, their assets. And they owe a debt different than everybody else who's in their financial area, right? So every case is different. It's kind of like flipping a Rubik's Cube. So you just take each factor and you kind of put the pieces of the puzzle together and you look at the options available. Every state has different tax debt resolution options. They usually follow the IRS, but some states, like for example, don't have the settlement option. So it's okay, what's the next best situation we can get the client to qualify for? It takes time, experience, putting all those pieces of the puzzle together and figuring out, yes, here's our top one or two options, and figuring out with the client what they feel most comfortable with, and then throwing the armor on and getting it done.
Do you ever get involved in situations where, like, you get those, I guess you call them love letters or notices from the IRS? It turns out that client doesn't owe that much that the IRS is demanding or stating that they owe. And then how do you go, like, before it gets to kind of those options you were talking about where they're more of like the, okay, surrender, I'm guilty. Are we going to do a payment plan?
Sure.
Can we get the penalties waived, an offer in compromise? Do you ever is that likely? Does it ever get to the point where the IRS either makes a mistake or agrees that the tax that they're claiming is not really owed?
Absolutely. Absolutely. I had a client come to me. She was being handled by, unfortunately, one of the big resolution firms, and nothing was getting done. She had a self-employed business going back to 2016, and she used to move every year. Apparently, the IRS put her 2016 return under audit. She never even knew, because the notices weren't going to her current address, and they disallowed all of her business expenses because she didn't respond. So 2020, she ends up getting a notice for $140,000 and panics. I mean, my gosh, if you're a self-employed individual, right? Think about everything that you pay, your insurance, your supplies and materials, any contractors that you farm work out to. I mean, the list goes on. And for them to say, well, we're just disallowing all of it because you didn't respond, it made her have a very large tax bill. So, like, for her, we ended up asking for an audit reconsideration, and we sent 200 pages of documentation to the IRS that they're now going through. So we'll end up taking that six-figure bill. It could end up at zero. So, and the sad thing is, when the IRS does it, then they notify the state that you live in, and if you pay state income tax, they're going to do the same dang thing. So we ended up with a state tax debt issue as well that we had to also kind of piggyback and send them all the docs as well and say, the IRS made a mistake, and thereby you made a mistake, so we need all of this fixed.
Yeah. You mentioned the offer and compromise settlement program. I guess what would go into whether the IRS, and I'm sure it's every situation is unique, but what goes into whether the IRS accepts the settlement? And is the settlement simply meaning, okay, the IRS says you owe $100,000, we're offering to pay 10 or 20 or some number, and they either come back and say, yes, we accept it, or no, we don't. I guess maybe can you walk us through how that program works?
Sure. With an offer in compromise, there's a couple of different ways to go about it. The big one is, hey, I just can't afford to pay this debt. And the way we calculate what our settlement pitch is based on the equity you have in your assets and your monthly income versus a national standard for allowances. If you go to the IRS website and look up collection financial standards, there are all of these factored allowances for what county you live in and how many people are in your household. They look at average food, clothing, personal housekeeping supplies. They have averages for most things that we all have as a normal household expense. If it's a business, it's kind of the same principle. How much equity have you built up in assets? And then what is the average monthly income versus expenses for the business? I mean, business offers and compromise are extremely hard to get done because they look at the value of the business on a whole as well as the other factors that they take into consideration. With an individual taxpayer for 1040 debt or any personal assessments from a closed business or an ongoing business, they look at just your equity and assets and your income versus expenses. So let's say, for example, you're a family of 4 and you live in the Midwest. You rent your home. You have 2 vehicles that each spouse drives to and from work. You have 2 kids in public school. You don't have a lot of savings. You don't have a lot of money in 401ks or investments. And you're living paycheck to paycheck, basically. That would be a situation where if you owed $80,000 or $100,000 in taxes, you would probably qualify for an offer. Mm-hmm. But we have a lot of people who come to us and say, I want an offer in compromise. I've seen it on TV. You know, everybody's an offer. Yeah. But when you start looking into the bank statements, which the IRS or the state will do, because they do a full deep dive into your financial picture. Mm-hmm. They look at bank statements. They look at how you're spending your money. Then we see things like $300 a month on streaming services, plus cable TV, plus eating out 3 times a week. You know, those kinds of situations throw up red flags for offer specialists. So,
and then you mentioned it's tough for the business owner to get an offer in compromise approved, and because one of the things they'll do is look at the value of the business. Is the IRS saying, you know what? The solution is sell your business to pay your tax debt? Is that what that meaning is?
So when you're asking to settle the debt, yes, they'll say, you know what, you can sell your business for $250,000. I mean, not that it's a guarantee that it would sell, but the value of it is there based on the financial forecasting of the business and the reputation that you've built up. But if the business is in that kind of condition, you're probably going to end up being an installment agreement. You're probably going to end up, because with a business, with payroll tax, they don't just look at the business to address the debt. They also look at who was responsible for the debt having been accrued, because payroll tax is a trust tax. You as the business owner or the in-house accountant or the manager or whomever oversees payroll oversaw the money being taken out of your employees' paychecks to hold in trust to turn over to the federal government or the state government, and that broke down. So somebody made the decision on the behalf of the business. So they can pierce any corporate veil to hold anybody responsible for that payroll personally responsible. So then they have maximized, they've added to the avenues that they can try to collect the debt from. So that's another reason why business offer and compromise, those are very unique. They're hard to get done. I've only handled 7 or 8 of them in the last 24 years, because when you start whittling down and working with a business owner and working on the income and the expenses that they are choosing to pursue, choosing to put in place, you can usually find leaky holes, right, in the spending bucket, and you start saying, your payroll is significantly higher than your income justifies, right? Like we need to start reevaluating everything that you're spending money on at the business level so we can get your spending more in alignment with the income being received. And lo and behold, we usually find a couple $1,000s of expenses that the business owner's like, oh my gosh, I didn't even realize I was spending that much money in this direction. So yeah, it's when we work with a client, a business client who has a tax debt, it's not just, kind of filling out paperwork and going, okay, sending it in to the IRS or the state and keep your fingers crossed. I mean, we dive deep and we evaluate the financials the way the IRS and the state do. Because then we can say, yes, for sure. I know without a shadow of a doubt that I can get this solution done for you. But with businesses, if they're viable, and they're probably going to have a way to address the debt one way or another.
An individual declaring bankruptcy have any impact on whether their tax debt is collectible or not collectible or can be discharged, or is it totally separate and the IRS will look at the financial condition whether someone declares bankruptcy or not?
Great question. With personal income tax after 3 filing seasons, 3 filing years, you can usually discharge an income tax debt. Trust taxes, which are payroll taxes or sales tax with the state, cannot be discharged in a bankruptcy. So, unless you're doing a reorganization bankruptcy and you're addressing your debts through it and those debts are included, you're still going to have the tax debt. So, but each state law is different, right? So you really need to speak with a local bankruptcy attorney for an evaluation. Like, hey, is this something I should consider? If the tax debt is the only thing that you have plaguing you other than a few like credit cards, I would second guess thinking about a bankruptcy. Because the moment you file bankruptcy, your credit score gets tanked. And it haunts you for a really long time. So you never want to go that route unless you are desperate.
When should someone reach out to you? Is it the minute they get their first notice? Is it, because I'm sure that, and kind of the question's a little bit in conjunction with, there's a lot of do-it-yourselfers out there who probably get a notice and are like, yeah, I can handle this myself. And then they wind up that they can't, and they get over their head, in over their heads with it. When should someone, or actually, can someone handle this themselves, or does it make sense to get a professional involved?
I would say if you have a simple tax account situation, and when I say simple, there's a sliding ruler for that. But if it's an individual and they owe less than $20,000, and it's just a sunspot situation where they're not going to have another problem. It was just 1 year. It was a one-off. Go ahead and handle it yourself. Grab my book, Tax Debt Rule Number 1. There's always a solution, because I walk through how to do that. I walk through the installment agreement plan that you want to ask for. When you get beyond that, and when you have multiple years of tax debt and you're going to owe again, or if you have a business and you have payroll tax, my recommendation is not to do it yourself. And the reason is because too many moving parts start coming into play. There's collection statute expiration dates you need to be sensitive to, personal responsibility assessments that you need to be aware of and know how to handle. The bigger the liability, the more you want to phone in a professional to handle it. And some accountants and CPAs are doing this more and more. If you have a CPA or an accountant that you want to talk to about handling it, just make sure that they have the experience to do it. I saw somewhere online on one of the accountant feeds, this CPA said, well, I'm handling my first tax debt resolution case, and it's a business and they owe $280,000. What do I need to do? Who do I call first? And I thought, oh, Lord, there's so many moving parts to that. The personal responsibility assessments, it's just, if you don't have a good, comfortable feeling for the the board that you're going to be playing on, it's best to seek a professional to get involved. But for simpler debts, go ahead, try it yourself. Make sure and do a little bit of research before you do.
I want to go back to something you said earlier. You said the number one fear that people have is going to prison, or the number one question that they ask is going to prison. And you mentioned it's not really how it works, but the IRS doesn't kind of dissuade people from thinking that. Do people ever go to prison for tax debt?
Yeah, they do. They do. But it's not as many as you would think. I think on average it's about 500 people per year go to jail over a tax debt. And these are the nasty cases. These are cases where there is fraud that the IRS has uncovered, where people have refused to address a tax debt. They refuse to comply. They lie on financial statements they give to the IRS. It does happen, but it's in extreme situations. If you're listening to this podcast, my bet is you are not going to be one of those people, right? If you have a problem, you're going to be proactive with it. And that's the best thing I can tell people to do. Don't become an ostrich and bury your head in the sand when you start getting notices from the IRS or the state, because at that point you become reactionary. You want to be proactive. If you're getting notices, open them with all the strength that you can muster and the tallest backbone, right? Because if you are proactive with it, you're in control of what happens. If you don't address it, the IRS and the state will say, okay, well, the notices aren't getting their attention. We're going to go ahead and start taking action now. And that always happens at the worst time for you. It's Murphy's Law. But that would be like bank account levies. You go into your bank account one day and there's zero in there and you had $3,000 in there the day before. Wage garnishments. If you are a self-employed individual and they can hunt down 1099s that have been reported for you, they'll turn to those sources and say, you do business with this person, they owe us money, you need to send us anything you owe them right now. Those types of levies just destroy a person. So, yeah, be proactive.
Looking ahead, what do you see for the future of the tax resolution industry?
Boy, I don't see it lightening up at all. Following COVID, during COVID, a lot of the tax centers shut down. I don't know if any of you had seen in the news, the IRS was literally throwing mail they got into the back of tractor trailers. Okay? There were photos of their cafeterias at their bigger campuses with stacks of boxes, just one after another, piled all the way to the ceiling, of correspondence that was received, but they sent everybody home because of the COVID threat, so nobody was working. So all the systems they had broke down, and it's taken some time, but the IRS is finally getting back to some type of normal with their collection efforts, because if you look at everything that's going on in our world right now, our country is bleeding money. Where is the easiest place for them to start recouping? People who have a tax bill, right? So we're seeing more aggressive types of notices going out. They've changed the notices to be more threatening, to sound like they've got a bigger bite to them than they really do. But it's all with the effort and the drive to get people who haven't been addressing these taxes to start paying attention and to be scared and intimidated. In 2021, the tax gap was 600 and let me get this number. Reported tax gap was $688 billion. That was as of 2023. Oh my gosh. So, and with the states, when somebody owes the IRS, they typically also owe the state. With the states, they feel every dollar more than the federal government, right? At the federal government level, it's almost like monopoly money. Because when you say billions to politicians in Congress who oversees what the IRS does and like the laws and policies they follow, they're like, oh yeah, a billion here, a billion there. It doesn't mean a lot. But when you look at your local, your smaller municipalities, the states, man, every 100,000 impacts the budget and what you see happening around you in your communities and within your state. So states are known in our industry to be way more aggressive than the IRS. And the states tend to pick up on a tax delinquency a lot faster than the IRS.
That's a gap of taxes owed versus what's actually been collected.
Yes. They've gone back and forth on the number. When the first bill came through, every politician on both sides, defund the IRS, right? You had extremists on both sides, which makes me laugh because politicians at our national level know that you have to collect taxes for our government to be able to operate. Where do you think all of the money to support our military comes from? Right? They don't just, well, they do kind of print it, but there has to be money in the coffers to spend on these things, to send out the monthly Social Security benefits. This is where all this money gets funneled into. So when you hear a politician saying, defund the IRS, please know that it is just a grab for your vote. That's all it is, because not one of them or their donors want to defund the IRS. And tax policy has always been one of those big things that politicians love to talk about. I'm going to change the tax policies, which is a bunch of garbage. And I go into this a bit in my book. Our tax code is insane. It's so big. And there are so many loopholes and small details that not a lot of people know. And for good reason. You can't keep your arms around all of it, right? But all the donors to the politicians love their tax credits, deductions, and write-offs. For that reason, I will tell you, we will never have big sweeping tax policy changes. At least not with the way our government is right now. Who knows? Something could happen in the future and somebody says, oh my gosh, let's go to a flat tax. Everybody pays 20% to the feds, 5% to your state. Done. Wouldn't that be a beautiful thing? I mean, we all love our credits. Oh my gosh, wouldn't that be so nice? But yeah, no. And what happened with that bill, and I'm so sorry, I know I'm a little long-winded. What happened with that bill was they wanted a lot of it to train new revenue officers to come in and tidy up collections following COVID, right? Because the standard operating procedures of the IRS are still out of whack. You can still mail in a tax return and 3 months later, you're not hearing anything. You don't have a confirmation that it was processed. I've had that happen on several cases over the last 2 years where we send in paperwork. We have it delivered via certified mail. We see somebody sign for it, and then it like disappears into Never Never Land. And it's been so frustrating, and it's just because their procedures and their policies and their internal workings still aren't in line with what they're trying to accomplish to collect the taxes at the national level. And so this policy, this bill was going to fund all of that being worked on. Their tech is outdated. You cannot email a connection at the IRS because it's not secure. So they needed, I will tell you just from dealing with the tax debt side, and you call in and you sit on hold for 2 hours, right? And then the system disconnects you because you've been on hold for too long. That's part of what they were trying to address with that spending. We need people to be able to answer the phone within 30 minutes of somebody calling in. We need to train people so they know how to do their jobs better. We need better infrastructure with our IT. We need people to be able to submit their tax returns in a very easy manner. And they're getting better, but I know they sliced and diced that bill that was going to that incited the whole defund the IRS movement. But taxes aren't going away. And with everything that's happened in the economy over the last few years, more and more people are filing their tax returns with a bill or not filing for fear of having to deal with a bill. And it's sad what's happening, but we'll eventually turn around. It always does. So
yeah, I guess it's just probably more nimble than the IRS. But I think, and this was a couple years ago, it started where I think there was some funding that the IRS was that was going to be given to the IRS to enforce some of that tax gap. And I don't know if it got passed, or at one point I guess it didn't, and maybe now it did get passed. So maybe that, I guess, is going to ramp up. All right, Morgan, that's all the questions I have for you today. I want to thank you for joining me on today's episode. You offered some great advice for people with tax debt. How best can someone reach out to you, find out more about what you do?
Go to our website, goldenliontaxsolutions.com. You can find me on LinkedIn. You can find me on Facebook. We have a Twitter, or X, I guess, address that we post things through, and just reach out to us. I will always talk to somebody about their situation and give them an honest assessment of, you can handle this yourself, here's what you do. Or, you know what, let's sit down and talk about this more in depth because I think you do need some help getting this handled.
Great. We'll link to all those resources in the show notes. Thanks again, Morgan, and thank you to everyone who tuned in today.
Thanks so much, Mark.
Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.